If you have a human doing something for you, it's just because that's the way you want it, and you have the means to have a human doing it for you.
Some people play it safe. Others take risks that redefine their career. Today, we're talking to Jeff Ransdell, a Wall Street veteran turned venture capital visionary. Jeff's journey shows that success isn't about luck or titles. It's about mindset, how to embrace uncertainty, spot opportunity where others see risk, and take disciplined action that creates real value. Now, leading Fuel Venture Capital, he's connecting Silicon Valley innovation to Main Street. Jeff's story proves that the principles driving success at the highest levels are the same ones we can all apply if we're willing to take smart risks and get on our front feet.
You and I get on a treadmill, you're either going to stop before I do, or I will die of a heart attack. But I promise you I won't stop. I won't quit before you quit.
So what character traits do you look for in the founders that you actually fund?
Are you coachable? And that's one of the things that we're looking for.
Hi, Jeff. Welcome to Common Denominator.
Yeah, thanks for having me.
When I think about venture capital as a layperson, because obviously as a real estate investor, I think of the idea of risk, and right, because you don't know what the future will be, but you gotta sit and analyze risk today. What is your process for analyzing risk?
Yeah, it's a great question. I think when people talk about venture capital, one of the things that comes up is, well, it's a risky asset class. Mm-hmm. And I think that you have to keep in mind, right, I came from capital markets, so mm-hmm. I was on Wall Street for 21 years. Everything from investment banking to trading to putting a deal together to managing other people's portfolios, the whole nine yards. When I look at the private markets and I look at venture capital, at least how my firm oversees it, I don't think that it is really all that much more risky than the overreaching public markets. And actually, I think that the public markets, quite frankly, have more risk, right? Because in the public markets, there's no door that is locked. I can come in and out of the front door whenever I want to. So if I wake up in the morning, there's a story that makes me nervous, I can sell out. Maybe that was the wrong decision. Emotion is the biggest killer of an investor, in my humble opinion. So in the private market, you're locked down. You really can't do anything about that. And I think ultimately at the end of the day, the asset ends up appreciating, as most assets do. But in the private markets, it's built-in protection that you really can't hurt yourself. And I think that that's a big thing. The other thing is, you made the comment, you can't see into the future. But I think venture capital, at least how I look at it, is it's really about individuals who have the ability to get on their horse and ride out into the future and understand what the future does look like, and then come back to the present and share that map with as many people as you possibly can. I think the people that are in the venture capital space are just wired a little differently. Not everybody can do those types of things. So I left capital markets to come into the private sector so that I could democratize venture capital, or let's just call it the innovative economy, and open it up so that more people had access to it, right? If you go back 25 years in this asset class, the only people that have been able to access this asset class are major institutions or the ultra high net worth individuals who have the ability to make a $20 million commitment to a venture capital firm. That's not fair. And I think that my job is to come from the capital markets, where I was serving investors and financial advisors, to come into the private sector and provide that same, what they're used to and what they've been used to at 80% of their assets. And we're just handling the other 20%, but in a very similar way. And so, one of the very first people that I hired in my team was a lady by the name of Maggie Vo. She's my chief investment officer. She was a long, short hedge fund manager. So you start to think about, well, what in the world is Ransdell doing? He's hiring a hedge fund manager to become his chief investment officer of a venture capital firm. What the hell is that all about? That's to your point right there. It's about risk. How do we think about risk in a very different way than most incumbents who have been around the asset class for a very long time, they would never think to bring in a hedge fund manager. But we're constantly thinking about the downside of the investments that we make. And then there's a whole host of analytical check boxes that have to be taken place before we ever actually write a check.
What's the commonality? Because I always think about the quarterback, the leadership. I don't believe, and maybe you can correct me if I'm wrong, but from a piece of paper, a business plan, to the time it actually gets executed, right? I think a lot, like in my business, I think a lot about how many times I've had to have resilience, pivoting, and it has to just come from lots of failures, but just continuing. I think that that's a pretty important thing when it comes to business. Business is so unknown. And to that point, I don't think, probably maybe 1%, maybe 5% of actual business plans, this is what we're going to do. We're going to do this, actually ends up happening. So what character traits do you look for in the founders that you actually fund?
So what you're referring to is experimentation, which is extremely important when you're building a business, and you know that better than anybody. And I love how you just said that. You might go in, you might start day one with a business plan that you're going to do a certain thing, but then you get into it and you realize, oh, I need to pivot. And I think that that's an important characteristic. Do you have the ability to understand that the wind has changed and that you need to set a different course? And if you're unable to do that, if you're just so stubborn that, no, this is the way, then you're probably going to run into problems. So one of the characteristics that you're asking me about right now is, are you coachable? And that's one of the things that we're looking for. Before we ultimately will write a check, and again, there's a long due diligence process. It can take a month, it can take 2 months, it can take 3 months.
Yeah.
It just really depends on us getting comfortable, taking the capital that other people have entrusted with us to entrust with them. But at the last step, we usually want to have a dinner. We'll break bread. I want to spend time with that individual, not away from the business. Who are you as a person? Really get to know you and try to understand, do you have a track record of success? I'm a big believer in that. If you've been successful since you were young, maybe you were the quarterback of your football team or the captain of your hockey team or whatever the heck it was, those characteristics tend to follow through your entire life. And conversely, if you're not successful, they will continue to follow through your entire life. So one of the things that I do on the team that is non-analytical is the gut check. And that's where this dinner comes from. That's where I'm trying to understand, who are you at your core? Are you coachable? Are you going to be there? Because as you know, you've been in business. There's nothing easy about it. It's like a roller coaster. One day you're at the top of, and you think, oh, this is the greatest thing in the world. And the very next day, you're at the tranche, and he's like, what the hell have I done here? And you have to have that mental strength to be able to get through it. And I want to know if you do, because it's going to get really, really hard. And I want to make sure that when the storm is at its ugliest, that you're not going to jump off the boat. That you're going to be in the helm, and you're going to make sure that we get through the storm on the other side.
Yeah. I'm raising my first, we've had other investors, but we're raising our first fund. And it's interesting on the reverse side, and maybe you find it also. I told my partner, I said, and she's in charge of raising the capital and doing all the regulatory. I said, there's good capital and bad capital. What I mean by that is that when things get rough, and 100% of the time, nothing's like this.
Yeah.
Right? It will get rough on the capital side. Your LPs, your investors.
Yeah.
What's their nature?
Yeah.
Do they get it?
No one's ever asked me that question. I've been managing other people's money for, I don't even like to say this, but 32 years now, right? And you're absolutely correct. And I think we're at that point right now in venture capital, because understand, right? The last 3.5 years have been the worst, we call it private market, winter. The IPO market shut off, interest rates went up 700%, at-risk assets, shifted, everything changed. And so the last 3.5 years have been very challenging. And what has happened is a lot of exits, a lot of monetization that was scheduled, let's say for 2023, well, it got kicked down the road. And that's why we have 10-year funds, right? That's why we have extensions, because you and I, as good as we might think that we are in riding out into the future, we don't have a crystal ball. And if we did, we wouldn't even be sitting here right now talking to one another, right? We'd be on our super yacht somewhere. So we don't know what the future is exactly going to have for any of us. And I think how good capital and bad capital, I think, is interesting. I think it's all good capital. I think it's your and I's responsibility for the cadence, right? When things get more difficult, you have to increase your cadence. It's all about communication. People just want to know what's going on. They want to know that you're not sick at the helm, that you are still fighting a good fight. And as long as you do that, I think you're okay. Where it starts to get bad capital is when you're not communicating. And I believe that investors, when they lack information, they make shit up. And it's usually never good. And that's my experience.
Right. You start that with people that have been through war, okay, the war of business. They feel it.
Yeah.
They know. And then you go down a downward spiral. You don't answer their calls. And I've heard that over and over. The number one thing, right, if you're a GP and you're taking LP money, communication.
Communication. Yeah.
I've seen it. I remember having a conversation with a bridge lender. And this fellow, who was lending money to this fellow that I know had a few bankruptcies. And I said, oh, he mentioned that he's lending money to this fellow. Strange, he had all this tough time. And number one reason, because he communicated.
Yeah.
He communicated.
Yeah.
They get it.
Yeah.
People get it.
Yeah.
Right? So don't be afraid to jump in, be extremely accountable. Really good, I think about really good technical financial delivery every quarter or every semi-annual, right? You're giving them the documents. Yeah. And what would you say, now the key difference between being in the capital markets and venture capital? Like, in other words, you made that switch and you took that risk by starting Fuel, right? What was the moment where you're like, you know what? I want to go into venture. Because I guess you're right, you were managing lots of money with Merrill Lynch, right?
Yeah. I was ultimately responsible for a lot of money. I wasn't actually managing it myself.
Right. But then you got to manage your emotions, and you're dealing with a lot of numbers, right?
Yeah. Exponentially easier than what I do now, believe it or not. I think I was ultimately responsible for $138 billion, $2.2 billion P&L, 5,000 employees. I had 14 regional directors who reported directly into me. I had 2 personal assistants. I had a compliance officer. I had attorneys. I had, everything was there. And that's the big difference. I was fully staffed up, and all I really had to do was be a good steward, right? I needed to have a good mindset. Anyone who knew me, at Merrill Lynch, I think that they would say, Jeff was just always a little odd. He was just different than everybody else. I didn't dress like everybody else. I didn't talk like everybody else. I didn't look like everybody else. And that was purposeful. How do you stand out in a crowd of 33,000 people? You have to work at it. And so I think the biggest eye-opener for me was that, when I started Fuel Venture Capital, to be honest with you, I hardly even knew how to turn a computer on because I had people that did it for me. Right, I honestly didn't have much of a skill set of getting tasks done myself. When I was at Merrill, I just had to think about it, and then I had a whole army of people to execute. Starting Fuel Venture Capital, let's just be very perfectly frank about it. It was a venture capital startup, right? Yeah. And as a result of that, to this day, I have to do not everything, but I have to do a lot of things myself. And that has been exponential personal growth for me. If there's one thing over the last 8 years that I take a step back and say, what are the big benefits in what you did? The biggest benefit for me is what I've learned as a human being. And I'm much smarter today than I ever was before. And I think I was pretty smart back then, but I'm much smarter today. I have an opinion, be it wrong or be it right, but I have a very strong opinion on what the world is going to look like very soon. Very connected to founders who are changing the world. I think that 99% of the population has absolutely no clue what the hell is going on. And if they did, quite honestly, I'm not sure what would happen, because we're at a time in our human condition that we have never been at before. Period, end of discussion. You can invent the wheel, okay, and that was very productive for us as humans to help us get from point A to point B very quickly. But it was just a wheel. It doesn't really ripple into other things. We are at the moment of a meta shift with AI, and people are just now starting to understand what that means. But again, nobody knows for sure, and I certainly am not trying to articulate that I do, but my opinion is that everything is going to change, in the next 3, 4, 5 years. I don't think we're even going to be able to recognize what things look like. And so we're in a very interesting time, and I'm very fortunate to be able to be in the thick of it all and help investors have access to those things that they've never had access to do. Because I think if you don't, you have to kind of make as much money as you possibly can make over the next 5 years. After that, I'm not quite sure what's going to happen.
Because most tasks will just be done by AI.
Yeah, it's even deeper than that, Moshe, if you think about it, right? I mean, Einstein had an IQ of 160. ChatGPT 4 has an IQ of 155, I believe. ChatGPT 5 is expected to be 10 times smarter. And we're expected to see ChatGPT 5 next year. So we're on the edge of literally having something that is non-human, that is smarter than any human that has ever been on the face of the planet. I was on a panel about a month ago, and someone asked me this question. And I articulated exactly what I just did. And I said to the people, I said, now just imagine you and I are at dinner with Einstein this Friday night, somewhere here in Miami. How long does it take for him to start getting frustrated with you and I? We're smart guys, but we don't understand a third of the things that he understands, and he's trying to get us to understand it. What happens to that conversation? That frustration. And we're about ready to be there with non-human entities. So yeah, if you can have an AI agent that is doing your analysis. So for example, at my firm, I have one human analyst. I have 2 non-human analysts. My 2 non-human analysts are never sick. They're never on holiday. They work 7 days a week, 24 hours a day. If I want them to do something and review something before I go to bed, I have it when I wake up in the morning. Everything is changing. And by the way, the work is rarely wrong. And that doesn't matter if it's in the healthcare industry. I don't think it matters if you're an attorney, if you're an analyst. I think that it's going to get really interesting. I think in 5 years, if you have a human doing something for you, it's just because that's the way you want it, and you have the means to have a human doing it for you. You get some old school people. They're going to want to continue to have that old school feel, but most people aren't.
And the question is going to be, I guess, right? Because on the macro level for countries, right? GDP, growth, what do you see functionally happening 5 years, 10 years from now? Jobs, people, what are they going to be actually busy with?
So again, I'm not suggesting that I'm right, okay? That's the key here. That's the really important thing.
I've spoken to people on all sides.
Well, if I'm right, I think that there's going to be a significant unemployment. I mean, 30%, 40%, 50%. Some people even say higher than that. Some people are suggesting it could be 75% of the population, doesn't go to work anymore. And the reason for that is simply because a robot or a non-human can do that same task much cheaper. Now, if you're in that world, some people get really afraid of that, but if you're in that world, everything is very cheap, isn't it? Because any business, and your real estate business, the most expensive line item in your P&L is the human element of it, the human beings that you're paying on a daily basis to come and work for you. But if those people are replaced by something that's costing you, $50 a month, $100 a month, all of a sudden the profitability of companies is going to be exceptional. And so things just aren't going to cost as much. And so some people actually argue that it's going to be more similar to maybe how your and I's grandparents lived, right? They lived on a farm. They had kids to help work on the farm. When it was winter and there was, we couldn't work the land. It was you spent time with family. You had dinner as a family every single night. You played games at the coffee table. You spent time and quality with people. You were in the moment. We've kind of gotten away from that, and some people suggest that we're going to be going back to that. And I don't think that that's such a bad place to go if that's where we end up going. So I don't think that it has to be a bad thing. However, there are individuals, probably if I'm pointing inward, like myself, whose identity is largely in what he does on a daily basis for a living. That's just, I started my first company when I was 14. I don't know. I'm not very good at many things, but I'm good at working, right? And so what happens to a guy like me if I don't have something that is stressing me out to my heels every single day? Do I struggle with that? Maybe I do. I'm not quite sure. But there's a lot of people who are concerned about the human condition and how do we make sure that people are utilizing all this free time in a positive way. Only time will tell.
More and more people, that concept, it just seems subconsciously. Like we have a farm up North Florida, and more people ask about it, and they want that time. I think it was over 60% of our waking hours were on a screen, TV, phone, right? So people are yearning. Yeah. There is that.
Yeah,
so maybe that could be a good thing. What would you say is the number one, I guess, in the AI space or just company that you funded that you're most excited about and why?
Well, I think that's a little unfair because I'm excited about all the companies that we invest in. Otherwise, I shouldn't be investing in them. And they're all a little different, right? I mean, if we talk about local companies, like here in Miami, we're in Miami, so let's talk locally. And I can give you some from the outskirts as well. But, I think a great, exciting story, and it kind of lends back to what you were talking about 5 minutes ago around iteration and things changing, is TaxFile. TaxFile started 10 years ago in Miami. It was the very first startup in Miami. I was actually an angel investor in that company. I think it was the first check into the company. Another local legend, DJ Irie, who's a dear friend of mine. And Irie and I have we started this little investment fund together back in 14. And we were investing in private companies like TaxFile. It started out as a business to consumer online, get your taxes done by a CPA. So it's a gig economy. They have over, I think it's 1,500 CPAs around the United States that are in their network. And so at the end of the year, you want to get your taxes done. Instead of going to a traditional CPA, you just go online because everything you do is online now. You're kind of used to everything. You don't really want to talk to a human being anymore. I just want to text and get my stuff done. But it's a CPA. So if I get it audited or I need a professional, there's a professional licensed person on the other end. Then it went into B2B because there's so many of these companies out there, large companies, that are doing individual taxation, but it's not profitable for them. So it's better for them to white label TaxFile, which, believe it or not, and I don't want to list any companies right now, but if you're doing work at a major firm, there is a really high probability it's getting done at TaxFile. You just don't know it. So it's a really cool company, and they just iterated again and created an AI agent, which literally has taken the company to a whole nother level. And the profitability and the ability to move through a tremendous amount of scale is very, very high. And they're working with partnerships in really, really big companies, really cool companies. Again, I should probably be careful and not list all the companies out, but really cool company right here in Miami, doing amazing things, super proud of them. And again, because that's them understanding, hey, the world's changing a bit. We better, we have the intelligence to create an AI agent to help us here. And there's no question at all that something like tax will be done by an AI agent versus a human being moving into the future. And they were way ahead of it. And that was here in Miami. So I think that's a great story.
Yeah. A lot of what I do is like distress. So it's like broken broken real estate and we take it and we manage it, but to see something from its beginnings, right? If you have that, if you're wired that way and see it where it goes and how it grows, it's really amazing to see that.
Well, you were saying something earlier, and it struck me that there's real estate and venture capital. It's not really that different. It's different asset classes, of course, but again, it goes back to your ability to be able to walk down a street and see something, and say that could be something different than it is today, and I know it can, and I'm going to take the risk, and I'm going to put in the time, energy, mental capacity, and capital to make that and turn that into what I have up here in my mind. And it's really no different in venture capital. You have to be able to see someone, you have to be able to see a business plan for what it is right now, but more importantly, what is this going to look like in 5 years? And so it's very similar. Different asset classes, as I said, but still it's the same underlying core, I think, ingredient.
Definitely. What do you think the next couple of years? Do you think the market's you were saying kind of like it's a winter now for the past couple of years. Do you think now with interest rates, projected to come down?
Yeah, for sure. The IPO markets are turning back on. You're starting to see, I think there's over $1 trillion of private companies sitting on the sidelines right now, late stage tech companies that are waiting to go public, but they haven't, because the macroeconomic conditions just weren't appropriate. So you're starting to see now companies going public. You're starting to see companies leveraging things like SPACs again. It's all coming back online, thank God. And I think a lot of that has to do with the fact that we've seen a lowering of interest rates. I think, my humble opinion is we're going to see more lowering coming before we see it going. I don't necessarily think we're going to see 2% rates again for a long time. And quite frankly, I don't know that we need to. I think with retired people and some of the things that I was talking about earlier, I think that people who are retired need to have a yield that they can get, right? 0 or 1% or 2% just isn't going to cut it. So I think that that's a healthy thing. But yeah, I think 2026 is going to be a good year for IPOs, a good year for investors in funds like mine. I think M&A markets are coming back on. We see a lot right now yesterday I had a conversation with one of my founders about an IPO. We have 2 companies right now that we are preparing for IPO. What's interesting about it is the company that I met with yesterday, we were supposed to take them public, 3 years ago. Now, that company at that time was doing about $100 million in revenue at that time when we were originally going to take it public through a SPAC. It's now doing $300 million. And we will file for the IPO we planned in October and take it public in February at around $500 to $700 million in revenue. So for my investors, the value creation from 3 years because of what we do, which is, we're pretty damn good at curating companies and helping founders and building and doing good things and smart iterations and growing revenue and lowering burn and having a real business of profitability. But think about that. You're talking, even if you have a 5x multiple on revenue, that's a difference between, it's a huge, huge difference. And that's what I try, it goes back to good money, bad money that you were talking about. I don't think there's any bad money because I don't necessarily think, there's some bad people in the world, but you and I, shame on us if we allow bad people inside of our family, right? So the people that we let in, maybe they're just not as educated as everybody else. But I always like to tell people, you might get frustrated with me from time to time, especially in the last 3 years, because there hasn't been a tremendous amount of liquidity. But you have to understand that we only get one shot at exiting these companies. There's only one monetization event that we get to participate in. And if we don't get it right, if we get it wrong, it can be 300% return, 400% return away from us. So, I take it very seriously. I'm not, going out to clubs on Friday night. I'm working. So it's that's why I think people invest in you and they invest in me, because they know that this is what we're very passionate about and we're committed to, and we're going to do the right things on behalf of the people that we serve.
I like that. My kids also, I have them working since they're 14. So I just want to see, what is it that stands out for you that you're deeply grateful for?
I'm grateful for a lot of things. I think what I am the most grateful for is how I grew up. I grew up on my parents were the type of people that just believed in my craziness. When you're 14 years old and you go to your dad and you say, hey, I want to start a company, and I need X amount of dollars. Back then it wasn't a lot of money, but for him to say, okay, here it is, and let's sit down and, what is it that you're going to do? And I want to see your business plan and help me with that. And it didn't matter what it was. There was never a no, I don't think you should do that. And I think that's important. I grew up in a household where if I said I was going to be an astronaut, then by God, I'm going to be an astronaut. And if I said I was going to be a business person, then I'm going to be a business person. The other side to that story was I grew up, and my family is a big ranching family. And so I spent time on a big ranch, and, you were up at 6 o'clock in the morning, and if you weren't, my grandfather would throw a bucket of water on me, right? You had responsibilities to make sure that the animals were fed, and if they weren't fed, animals would die, right? So it was responsibility. If I wanted a new water ski, my grandfather will, then go sell one of the lambs, go sell one of the calves. The family has a good name, load it up in the horse trailer and go sell something. And so, I was doing that. I mean, I was driving in a truck in a trailer with livestock in the back of it when I was 11 years old, going from ranch to ranch, trying to get people to buy my animals for their kids in 4-H or whatever it might be. So I'm very thankful for how I grew up. You and I get on a treadmill. I promise you one thing: you're either going to stop before I do, or I will die of a heart attack. But I promise you I won't stop. I won't quit before you quit. It's just how I'm brought up. I never quit. I never give up on people. If I do give up on you, it's because you've given up on yourself, and I can't want it more than you do. So that's, I think, what I'm most grateful for is how I was brought up.
Love that. I want to say thank you so much, Jeff. It's really been eye-opening, and it's exciting. I mean, I'm excited about the future of AI and where we are going as humanity. Wish you the best of luck.
Thank you.
And much success.
Thanks
you
for
so
having
much.
me.
Thank you, Jeff.
Appreciate it.
Thanks so much. Thank you for tuning in. If you're enjoying Common Denominator, make sure to hit like, comment, and subscribe so you never miss an episode. Leave a review and share the podcast with a friend for more stories that inspire, challenge, and connect us all. We appreciate you listening.